Andy and Lisa back with you. All economic signs appear to point to an interest rate relief ahead of the holiday spending season.
We want to learn, are you planning and adjusting your spending and saving habits? You can scan the QR code to vote. Fed Chair Jerome Powell laid out his monetary policy forecast at the Kansas City Federal Reserve Summit in Jackson Hole, Wyoming today. As Laura Aguirre explains, while he stayed light on details, he did set the stage for a long-awaited September rollback.
The time has come for policy to adjust.
It's the Fed's clearest signal yet that rate relief is on the way.
The timing and pace of rate cuts will depend on incoming data.
That magic word, cuts, which most economists expect will begin next month. But just how deep is still unknown.
With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation.
That dialing back has been a long time coming. The Fed started aggressively hiking rates in early 2022, reaching a 23-year high to combat the highest inflation in decades as the world tried to recover from a global pandemic. The economy has been growing, but consumers are still feeling squeezed by the high costs of credit, mortgages, groceries, and other loans.
With prices having risen 2.5% over the past 12 months, progress toward our 2% objective has resumed.
The Fed's favorite inflation gauge, the Personal Consumption Expenditures Price Index, showed an annual rate of 2.5% in June, down from just over 7% 2 years ago.
The labor market has cooled considerably from its formerly overheated state.
A cooling amplified this week after the Labor Department shaved 818,000 jobs off a 12-month total ending in March. That, plus the current unemployment rate, highest since the fall of 2021, has many Fed watchers anticipating an even bigger rate cut than what may have been planned. The Fed's next policy meeting is in mid-September. I'm Laura Aguirre reporting.
With interest rate cuts expected next month, now is the time to start planning.
Right. There's no better time to position yourself for the opportunities that lie ahead. Financial expert Mark Madrid is here to walk us through the steps that we should be taking. Mark, thanks for joining us. Let's jump right in here. Assuming the Fed decides to cut the rates, how will this directly benefit consumers and small businesses and impact their borrowing costs?
Well, thank you for having me on. Welcome words from Jackson Hole. A rate cut can be a lifeline for consumers and small businesses right now, making borrowing less expensive while boosting spending power. What does that mean on the ground? In other words, relief is on the way. This means lower interest rates on loans and credit cards, making it more affordable to finance big purchases or interest or invest in business growth. That's the bottom line. We want to feel it on the ground.
And Mark, you talk about those big purchases. Specifically, how will that rate cut that's expected impact home prices?
That's a great question. Lower rates can make home buying more attractive and affordable, but also potentially driving up home prices. And this rate cut typically leads to lower mortgage rates, making home loans more affordable. This can increase demand for homes, potentially driving up home prices. However, the actual impact, and this is important, on home prices will depend on various factors. And we all know it can be unpredictable. But the most important thing to know is that home prices, mortgage rates will be more affordable on the horizon.
Okay, so should a homeowner or a person with a car loan now consider refinancing if their mortgage, if the Fed makes the rate cut here?
Well, refinancing, which is well, I hear it all the time because my business is small business. Refinancing could be a smart move to lock in lower interest rates and reduce monthly payments. Homeowners and those with car loans should consider refinancing if the Fed cuts rates. So be on the lookout. Like you said, it's all about planning.
And Mark, are there potential risks that consumers should be aware of as interest rates decrease?
Well, that's where I come in. I always say no one can take your education from you. So depending on your horizon, where you are with your credit card portfolio, how large it is, you want to talk to your banker, you want to talk to your financial advisor about your particular situation. For some, refinancing might be the best move. For others, we might hold for further interest rate cuts. So just keep watching KPRC. That's the goal.
All right, some great news.
Some good news.
Very encouraging.
We love all the smiles on your end, Mark. If you're smiling, we're smiling. You're the expert here, so this is good news. We're anticipating some good news next month.
Heading in the right direction. Mark Madrid, thanks so much for joining us. We appreciate it.
Thank
you.